Hey, what's up everyone? So I'm guessing you're here from my previous TikTok, but just in case you haven't seen it, I'm going to play it right after this, and then we can get into the rest of the video.
So the other day I made a video about an unhinged stock trader that made 50% on a trade in one day. Instead of being interested in the stock trader, most people were interested in how I actually made 50% in one day, so let me explain. Also, I just want to be clear, I only made about $60 on this trade because I don't like to gamble all my money in the stock market, but it's cool to see how high percent you can make. Okay, Stocks 101, when a company passes a major vibe check called an IPO, this means you can start buying shares in their company. If a company is worth $100 and they have 10 shares for $10, you can buy 10% of the company. If they are worth $200 in the future, this means your $10 share is now worth $20, so you've doubled your money. But for options, the standard contract is made from 100 stocks for a cheaper price, which means you have a ton of leverage. This means a trader with $1,000 can buy either 20 shares of a $50 stock, or they can buy 2 options contracts, each worth $500 for a total of 200 shares. That's 10x leverage. But what makes options so difficult is that they decay over time, so you have to time everything perfectly. And that's how you can make 50% when the stock only goes up 1.85%. I also just posted a video on how to start investing, so go check it out.
Cool, so that is how I made 50% on an options trade. It wasn't a ton of money because I don't like to gamble a ton of money, but yeah, options just give you a lot of leverage. So the rest of this video will be talking about stocks, options, my thoughts on investing, and where to start because that's what everybody was really asking me. So it won't go like super technical, but it's like a good overview of everything. I found that it was easiest to film this on my phone, so it's going to be filmed edited on my phone. Bear with me, but cool, let's get into it.
Cool, so we are in the iPhone, shot on iPhone. This video covers 8 topics. There will be disclaimers, economics, markets, then software mechanics, what we will actually use to trade, stocks, options, psychology, just ways to think about this, and then resources. So disclaimer number 1 is that I am not a trading guru. I don't brand myself as one. Basically, trading gurus have learned that people will buy courses. So number 2, don't buy courses from trading gurus. Only do this if you have the money. This is obvious, but yeah. And stocks and options are not the only way to make money. So Paul Graham has a really great essay about this that I'll talk about more later. Some of this stuff might be obvious, but I'm just trying to lay a foundation for everyone. And lastly, we are in a bull market, so be wary of that. Markets can turn. Okay, so economics. I've divided economics and markets up just because I believe that economics is the theory of markets and markets are the actual practice of markets. The first rule of economics is supply and demand, which basically means that every time you buy something, somebody else is selling it, so be aware of that. For growth to actually occur, value needs to be created. Something new must be built that has not been done before. Growth occurs in cycles, often on multiple timeframes, and when a new innovation is unleashed into the market, it often has a period of rapid distribution, and these S-curves build on top of each other. Growth is financed by credit and debt. You use your credit to finance your endeavors, and then you have to pay off your debts eventually. When everybody in society has to pay off their debts, this is what causes a recession. So for markets, this is, of course, the practice of economics. The main example that I like to give for why markets can be manipulated is that we have historically low interest rates right now. So this is a graph on that. I need to do more reading into what this actually means, but just be aware of things like this. Another way of saying this is that you need to pay attention to narratives in markets. And another example of this is that we have manager CEOs versus founder CEOs. An example of this is that Steve Jobs and Bill Gates built Apple and Microsoft, but right now those companies are being run by Tim Cook and Satya Nadella. This has happened in a lot of companies recently, and I'm not saying it's good or bad, but it just means that they focus on different things than the founder CEOs would have. Ray Dalio has really good writing on this about big debt crises when you extend your credit, and he's also done 48 detailed case studies. So how do you start trading? I personally use Tdameritrade ThinkorSwim. ThinkorSwim is an app that goes along with TD Ameritrade. If you're under 18, you might need your parent to escort money into the market for you. You can also check out Robinhood. A great thing about them is that they let you buy fractional shares, so you can buy like part of Apple. And they have commission-free trading. So this is the ThinkorSwim trading app. I personally enjoy ThinkorSwim because it also has a really good desktop app to go along with it. But anyways, this is how I would theoretically trade Tesla. I would click trade on the top right. I would add 1 share and then click confirm. I'm not going to do it, but then I'll look at like these are my open positions, and then these are the working positions if I had any. And this is just the settings and stuff. This is also just my day trading account, by the way. This is the Robinhood app. It's a lot cleaner than the ThinkorSwim app, and it actually makes me feel like I almost might use it. But I already have like custom trade alerts and everything set up. But it's really clean. I like it. You can easily buy Tesla, and this is what an options train looks like, and it actually suggests options based on your risk. So this is really good for an intro to options trading. So this is what the rest of the app looks like. I also might have a referral code in the description of the video, so be sure to check that out if you want to join Robinhood after this. So if you want to invest in stocks, let's talk about it. First, my experience. I started in 2012, and yes, it has been a bull market while I've been trading, and I'm very aware of that. But these are the things I've learned. You buy for the long term. Don't day trade stocks. You will get cut up. If you still want to day trade, I suggest you use options instead of stocks. I asked 3 questions before investing in a stock. 1, does this company create value? 2, do they capture that value? And 3, is it overhyped or not? A really good example of this is Netflix, which just so happens to be the first stock that I ever bought around this time period. Personally, I bought it because I was using Project Free TV, and this was so annoying. Netflix solved that, and that created value. The second reason is that they captured this value because the old networks did not want to transition into streaming because it cut into their legacy business. They had too much inertia. This meant Netflix had a monopoly on streaming. And was it overhyped? Hell no, because everybody kept doubting that Netflix would ever succeed. Current example of this is Tesla. They are creating value by creating electric cars. They are capturing that value with patents and innovation that other legacy car companies don't have. And third, I personally believe they aren't overhyped, but I invested in Tesla when I saw the grasshopper hovering because that's when I was like, okay, Elon can get shit done. Obviously, that's not why I'm still invested. I still believe there's a lot of value to be created, but that's another video. Know your theory and actively try to disprove it. Always try to find out if you can be wrong. I had an eBay story, but I'm choosing to do this GameStop story. Check out these DMs. This is basically how I thought about investing in GameStop if I was going to. Next thing to know is always have a stop loss ready. Like anytime you enter a trade, just know that if it reaches a certain level of loss, you will sell it. 2 last things, try to understand the psychology of the CEO and what their vision is. And also, you can use technical analysis, but it's more important for options. For stocks, it's mostly good for timing to make sure that you don't buy when it's overbought or oversold. Options, yay, we made it. Okay, let me just give you my experience. Let's switch to the camera.
Hi, so my experience with options is that I day traded to make money at one point. My biggest win was I made about 400% on an Amazon call, and that was overnight because I bought the call at the end of market, and then when the market opened, Amazon had climbed 3% based on their earnings, and that was a lot of money, a lot of percent gains. And then my worst trade is that I almost made 100%, and I was like, I'm at 90 something and I want to make it to 100, and it was pure ego, and I held, and then I lost all the money. So yeah, one good, one bad trade. But yeah, so now I just options trade if I see a good setup that I like. Back to the video.
What is an options chain? This is what an options chain looks like on the ThinkorSwim app. It's basically a chain of all the different strike prices that you can buy an option at and all the different expiry dates available. This is important in stocks. Don't chase, but it's even more important in options because options can become super overvalued very quickly. Practice paper trading with fake money first and then start using small amounts of money. You need to understand the expiration timeline of your option, when it will expire, how it will expire, and you can do this by using like an options calculator. This is just a very colorful example of one and how it decays over time. The prices here are percent gains and loss of options over time at time of expiry based on the stock price. And lastly, options have a ton of leverage, as I discussed in my TikTok, because the standard contract is made from 100 stocks. For technical analysis, I'm going to cover 2 of my favorite indicators, and the first is an Ichimoku cloud. First, we need to know that something like a 10-day moving average indicator is a rolling average of the previous 10 days price points. The Ichimoku cloud then determines if a stock is in a bullish or a bearish position, crossovers of a moving average. Then you add even more moving averages and you get this. The second indicator I like is Bollinger Bands, and it tells me if a stock price has deviated from a standard deviation, and you can see on the bottom left that it looks like it will bounce back. And lastly, psychology. Also, I really hope this is helpful. Let me know in the comments. Someone always trades against you. You are rooting for yourself, but somebody is rooting against you. Don't chase stocks. You haven't made money until you've sold anything. You only have percent gains until you sold something. You can easily get burned on that. And sometimes doing nothing is better than something, and always disprove your theories. Okay, good resources. So the first one I want to talk about is about market narratives, and this one is called Epsilon Theory. He has really good posts about why things are being manipulated, how they're being manipulated, what to do in this environment, stuff like that. Also, I really like that photo of the dog and the captions. This next one is called Stratechery, and it's about company narratives. He has really groundbreaking work on like why Apple or Netflix has really good moats and how companies like that can continue to innovate. Go look up other successful people and also CEOs of the company that you're looking to invest in. Wealth by Paul Graham taught me that value creation is not a zero sum game, as you can partially see by this GDP per capita increasing over time. Investopedia is a really good wiki for looking up terms. They have this intro to investing guide, and they also have this explanation of Ichimoku clouds, just as an example. And if you want a day trading community, don't use Wall Street Bets. It's terrible. Use The Wall Street. It's significantly higher quality, and there's some really good traders on there.
What's up? So I hope that was a really good overview of everything, and I hope that was really helpful. And the last thing I wanted to go over were just 3 books that are really good for market narratives. And of course, the first one is Big Debt Crises, Ray Dalio. He goes over a ton of case studies on how debt and credit financing can impact markets and also the narrative surrounding that. The second one is Technical Revolutions and Financial Capital. It's a dense textbook, but it shows how S-curve technologies such as like a steam engine or the internet can impact how financial capital is allocated in the market. And then the third is 0 to 1. This is a classic book. It's about how to build a monopoly, and if you're investing in a company, you want them to be thinking about building a monopoly themselves. So those are my 3 favorite books. I know they're not like typical stock investing books, like this is how you analyze a stock and stuff like that, but in my opinion, for investing, it goes narrative, fundamentals, technicals, and that is to me the hierarchy in which I invest. And so I definitely benefit by reading books about narratives. They're definitely technical as well, but narrative first. So also check out my previous videos. I do have a video on ThinkorSwim and how to code algorithms to actually set alerts for when you should buy and sell a stock and how to judge the profit off of that. So highly recommend checking that one out. And also I vlogged some videos with like my friends that were starting a startup, and I've also made an Alice in Wonderland documentary about a DJ. So like and subscribe, comment, share, let me know what you think, and I'll see you in the next one. The future can be really cool. That is something I fundamentally believe. See ya.